Good afternoon, dear guest speakers and all participants. Greetings from Baku, Azerbaijan. Nice to see you all. Here, I am Aygün Alazgarova, a moderator for today's workshop, and it is my great pleasure and honor to welcome you here today at the workshop on the topic of the importance of digitalization for SMEs in trade finance, held in the frame of the 5th International Scientific Conference dedicated to the 100th anniversary of the national leader Haydar Aliyev, with the motto of the economic results of the century, jointly organized by the International Center for Graduate Education of Azerbaijan State University of Economics, Haydar Aliyev Center, and Regional Development Public Union. The main purpose of the conference is related to the international scientific platform that we are starting to establish in order to support the development of interdisciplinary research and exchange ideas on the contemporary developing trends of science, share experience, and increase the accessibility and quality of scientific research. Today, I would like to take this opportunity to express my thanks to all the speakers for taking your valuable time to join us today. I really appreciate you. And I would like to introduce the guest speakers of our today's workshop. Mr. Shajamon Majidzu, based in United Arab Emirates, is the Executive Director of Trade Assets and e-marketplace for banks, an experienced Mr. Majidzu is an experienced institutional banker with over 30 years of experience in international and financial institutions and trade finance. And Mr. Majidzu has got significant exposure with both international and Gulf Cooperation Council countries' banking institutions. Thank you for joining us today, Mr. Majidzu. Mr. Sid Bandari, based in United Kingdom and United Arab Emirates, is the founder and CEO of Newbridge Fintech Solutions. The company operates as a global marketplace for wholesale deposits, and Mr. Bandari has over 22 years of experience, including senior leadership roles in global markets and asset management. Welcome, Mr. Sid Bandari. Nice to see you here. Mr. Istvan Lingiel, based in Hungary, is the Secretary General of the Banking Association for the Central and Eastern Europe since 1996. And under Mr. Lingiel's management, Banking Association organized more than 100 international banking conferences, study tours, webinars, public and in-house training courses with the participation of more than 10,000 bankers. And as a chief analyst, also Mr. Lingiel prepares analytical papers on the financial sector of Central and Eastern Europe and holds training courses on bank analysis, corporate governance in banks, IFRS, Basel III and IV. The topic of today's workshop is related to the importance of digitalization for SMEs in trade finance. And trade is an important, as we know, trade is an important factor in any country's economic sustainability, with an estimated 90% of global trade requiring financing. And this is because only a small part of international trade is paid by advance payment, as importers generally prefer to pay on receipt of the goods so that they can verify their physical integrity on arrival. And conversely, exporters typically require payment integrity on arrival. And also, trade finance is therefore frequently needed to bridge the gap between payments made at each end of the transaction. And trade finance here is clearly very important to mitigate the risk associated with cashless trade transactions. And also it provides short-term loans and working capital financing, of course, supporting letter of credit, documentary collection, and the bank guarantees needed to facilitate the payment for the goods or service in terms that will satisfy both the exporter and importers. And as we see today, digitization provides huge opportunities for SMEs to become more efficient and productive. And especially COVID-19 accelerated the uptake of technology across all sectors. But not all SMEs have taken, of course, full advantage of the opportunities for the developing a new business model, and they have not yet realized the significant benefits that the digitalization provides in helping SMEs to integrate into global markets, thereby widening trading opportunities. Therefore, we are here to discuss today the importance of digitalization factors for especially for small and medium enterprises globally in trade finance. And I would like to start my workshop with a question on how can banks assess their readiness for digital transformation, and what factors, namely, should they consider when doing so. And I would like to start with Mr. Majitsu, taking into account his huge experience and strong background in trade assets. And I would like to ask this question to Mr. Majitsu. The floor is yours. Thank you.
Good afternoon. Thank you very much, Dr. Aigul. It's a very interesting and rightly timed program whereby the world is looking towards digitalization. It is always the case because digitalization is not something which you can take it as a choice. No, it is actually it has become an essence for life actually. So it is whether you want it or not, there is no choice for you. You have to go ahead and do the digitalization of, let it be banking, let it be your family, let it be yourself. So when it comes to banking digitalization, because even in the company which I work, we are also trying to help the trade digitalize, because what we are doing, we call ourselves trade assets as a e-platform, and we are like a Amazon of banks. That's how we work. So when it comes to digitalization, I would like to take the case with when Steve Jobs first introduced the smartphone in 2007. The whole the thinking of connectivity has totally changed. Now, let you want it or not, even within your family, you need a smartphone, because when you have to have the connectivity with your bank, with your family through WhatsApp, and connectivity with your friends and your professionalism. Everything is now going digital. In this part of the world, actually in the UAE, there are a lot of initiative happening in terms of digitalization of banking sector as it is. We have around 9 digital banks in the UAE. It is started by Emirates NBD. They have a program of live. There is Mashreq Bank. They have a program, and there are a number of institutions. Zand Bank. There is another bank called Mariam Digital Bank, Community Bank. So such banks are really taking the digitalization for very fast forward. So it is like what I always say. It is like future will be integration of disruptive technology with partners and the banks itself. It is always a case of banks having partnership with the different fintech providers like us, and there are many institutions which have been providing digital solutions for let it be trade, let it be SME, whatever it is actually. Even nowadays, in the UAE, as a person, you can open an account digitally. You just download an app of a bank. You have your Emirates ID. Just key in your Emirates ID, and then you can open the bank account. So digitalization in this part of the world is taking good shape, and it's going forward as a global digitalization initiative. going forward. Definitely, as I said, banks will not have a choice. They have to embrace digitalization as a way forward. It is not the matter of how big or how small the bank is. You have no choice. You have to embrace technology to take the technological front forward. It's always the case. So I leave it to you.
Thank you, Mr. Majitsu. Thank you so much for sharing your experience. And Mr. Bandari, I would like to ask you your taking into account your as a fintech solution supplier and as a founder of the fintech solution company, we would like to hear your opinion, your thinkings regarding the bank's access for digital transformation and how much banks are ready to start for digital transformation and what the main factors we can consider here. Thank you. Floor is yours.
Thank you, Dr. Aigun. It's a pleasure to be here and speak about the bank's acceptance to digitization. And as my fellow panelists said, it's not a matter of choice. It's inevitability that the banks do learn and really, obviously collaborate with fintechs like ourselves. I've seen that, I think now banks led by many banks in UAE, but also globally, are looking to really assess the underlying infrastructure that they have built over the years, understand the legacies and what they can use that as an infrastructure to be able to kind of scale the business to the next level. They also cleanly assess customer experience, how they can elevate, because as more and more competition comes from non-banking institutions and technology companies, they have to be at the forefront. And the third approach is collaboration, right? So they really feel that, okay, here is a infrastructure that we have in terms of legacy. This is where we want to be, and what is the best way to reach there. And to be able to do so, they look to collaborate, because they know that, within the bank, these are large organizations. Innovations and nimbleness is not necessarily the key or as part of that unique core DNA. So they look to partner with firms like ours and saying, okay, here's a common problem that we need to solve. How can we collaborate and co-create solutions? So this whole co-creation of new ideas, new development, which takes care of better customer experience, but also internally workflow efficiencies. So a lot of their current processes, are driven by a lot of manual nature of work, which can lead to, obviously errors, but also becomes quite time consuming and with underlying cost. So if they can, through these workflow efficiency tools, be able to cater to time and cost saving, and also bring in less error, more transparency and auditability, then they're very open for change. Of course, they have to go through certain features like security. So the fintechs that they work with should be very compliant in terms of the global standardizations, in terms of information security, and other infrastructure, minimum infrastructure that they would expect. They would also look at other aspects in terms of regulatory compliance very closely. So those are things that fintechs obviously have to be ready for. But to answer the question, banks are very open for change. They are happy to collaborate with firms like ours, and really build solutions which can cater to better user experience, both from a customer perspective, but also their internal staff and departments. So I'm very optimistic about this whole future of this acceptance of change or digitization. Thank you.
Thank you, Mr. Bandari. How do you think, what are the key technological advancement in your business in fintech solutions, namely?
Sure. That's for me, right? The question.
Shaping, yes, shaping,
Yeah.
I mean, in banking industry
Yes.
globally.
So I think a lot of process-driven change has to be bring. So if the answer is that what are the new technologies that we are looking to, what the banks are looking to embrace, I think it could start from something as simple as building centralization of work processes. So bringing in, from simple marketplaces where, banks, their counterparties, regulators, not their customers, they all can be able to create a centralized platform for be able to originate, negotiate, discuss, and execute and settle trades, whether be it in the trade finance or whether be it in the loan syndication or wholesale deposit mobilization or any other part of trade. So that's one of the things that people have now adapted, that let's not make a single dealer platform or insular platforms. Let's be part of the open marketplace. So that for me, I think is a number one aspect of innovation, and the new technologies that the banks are ready to adapt. And again, the use cases for within that are better auditability, better transparency, and ability to reconcile data on a real time basis, ability to settle without any errors. So all of this brings a distributed ledger technology or blockchain into the fore. So now banks are building interoperability, the structures with interoperability, and adapting to the advent of blockchain in the use cases, whether be it in the trade finance, whether be it's in the capital market issuance. And one of the future trends that I see, which I think would be the most important factor governing the next 4 or 5 years, and related to that, the capital market issuance and trading will shift from the current practices into more tokenization based issuance. The whole capability of using the DLT infrastructure for issuance, as far as the issuer is concerned, or banks which act as advisors are concerned, that it brings down the whole cost of operations substantially. You have lesser number of intermediaries. You basically bring in real-time settlements and a lot of life cycle management tools which are currently embedded. Taking the example of loan markets, you have 300 to 400 page facility agreements. Now a lot of them can be embedded into smart contracts which become self-executing, so removing a lot of agency bottlenecks from the whole process. So these are the advantages and new technologies that I see. Of course, from applications of artificial intelligence is there. You have a lots of rich customer data by which you can create more personalized services, whether be into the wealth management or any other aspects. So those are the few trends which I see continue to take hold as far as banking industry is concerned.
Thank you, Mr. Bandari. Yeah, of course, to enhance the process efficiency of trade finance, your solutions approach to digitize paperwork and transform it into the blockchain network. And thank you so much. And now I would like to ask a question with Mr. Lingiel. Mr. Lingiel, nice to see you here. Welcome to our workshop.
Can you hear me now?
Yes, we can hear you clear and loudly. And Mr. Lingiel, based in Hungary, and we would like to ask him to share with us the Hungarian experience in, namely in government support programs for small and medium enterprises in the post-COVID era in general. Also, it's very important to ask you to how are you going to support the digital transformation for SMEs, and also export finance schemes for SMEs, if any.
Thank you very much. So,
Thank you.
as you told, I am based in Hungary, and we are a member of the EU. So the whole ecosystem for SME foreign trade consists of the European Union, the Hungarian state organizations, banks, and SMEs themselves. So I would start with the European Union because there is a very substantial transfer of funds from the EU to Hungary and other member countries in Central and Eastern Europe. One of these programs is the Economic Development and Innovation Operational Program, EDIOP, and Axis 3 is the Info Technology Development Program. And in this respect, more than 12,000 companies, Hungarian companies, received support to enhance e-services and information technology. So there is a direct transfer of funds from the EU to Hungarian SMEs, of course, with the participation of Hungarian state agencies. So this is the EU, and as you see, digitalization in the SME sector is supported by the EU by a special program. So the next step is the Hungarian government agencies. So here there are several of them. To start with, there is the Hungarian Export Development Agency. It's their general task is support Hungarian export in general, taking into account that about the half of the Hungarian economy is, the GDP is produced by large companies, international companies, which I'm not going to name, but they do not need this service from the Hungarian state. So even the Hungarian Export Development Agency is mainly focusing on Hungarian smaller and medium-sized companies. And they do a lot of things in developing trade relations. And one of the most important things is the Export Academy they created. So this is to train the staff of the SMEs in terms of foreign trade. And the next is the Garantica Loan Guarantee Agency. It's very, very important for the SMEs. This is about guaranteeing all types of loans, and about 1/3 of the outstanding loans to SMEs is guaranteed by this agency. So they have a very important role. About 2.5 billion euros is now the outstanding amount. The next is the EXIM, which consists of the EXIM Bank and the Hungarian Export Credit Agency. So the EXIM Bank is carrying out the classical EXIM tasks, working capital finance, investment loans related to foreign trade. What is very special that EXIM in Hungary is also supporting Hungarian companies which are not directly exporting, that they make part of the supply chain. A lot of investment has been done in Hungary FDI, including automotive industry, the accumulator industry, large developments and large investments. And there's a lot of Hungarian companies which are part of the supply chain without exporting directly, but with trading with these foreign companies based in Hungary, and they are also receiving the loans from the EXIM, which is something special. After the COVID, there was a problem with the decreasing industrial production, and EXIM, again Hungarian specialty, has introduced the Baros Gábor Reindustrialization Loan Program to support Hungarian industries to recover after COVID. And so that's about the Hungarian system of supporting SMEs and also the EU system. And now the next is the banks. About half of the Hungarian banking system is foreign owned, other half is Hungarian, locally owned. Banks are, of course, a very important part of supporting the SMEs. They use mostly state funds, which is important. So using special state guarantees and low interest rate special loans to SMEs is crucial for the sector. So a large part of bank's business with SMEs is not market based in terms of conditions. So they are subsidized by the state. And preparing for foreign trade digitalization, blockchain was mentioned. I was a part of the working group for some blockchain projects. Well, just a very short time, I took part in the WeTrade project, and very sorry to say that with Marco Polo, WeTrade was 12 banks plus IBM, creating a blockchain-based international trade platform, and now it is closed. And Marco Polo, the next similar initiative with 30 banks, went bankrupt. So the first trial to use blockchain in foreign trade was not very successful, but blockchain will be with us in another form. And I think that maybe these early starters were proposing these services too early and no real transactions have been carried out. What is a good news is coming from the UK and Singapore, that on 14th of June, as I learned, there was a pilot project between the Chamber of Commerce of UK Centre for Digital Trade and Innovation and Singapore's Infocom Authority for the utilization of electronic bill of lading and digital promissory note, and pilot trade was done with one single product. So that was the start. Hopefully it will develop. And a very important issue in terms of security. So it was a quantum secure seal cybersecurity solution, which helps to provide high security to these transactions. Yes, before finishing this part of my contribution, I would like to mention that in real life we have a lot of problems in international with the supply chains, and a very important issue is the compliance issue. So with sanctions, more and more sanctions introduced, and de-risking policy of Western banks for our banks, not so much for banks from the EU, but also for Azerbaijan. One of the problems is maintaining correspondent accounts, which is a little bit far from digitalization, but it's a daily issue, how to carry out payments in and trade in US dollars and euro for many banks from our region. So that's in brackets, it's a bit far from the original issue, but compliance is a very heavy burden. So it's a burden for the banks and also for the companies, and the supply chain interruptions is quite serious these days. Thank you.
Thank you so much, Mr. Lingiel. Thank you for your sharings. And now I would like to ask all the speakers your to give your advice on should the banks embrace and integrate the new technologies in terms of determining their long-term impact and viability. We can start with Mr. Majitsu.
Yeah, excellent question. Thank you very much. And my fellow speakers have done extremely well, providing an insight into what's happening in the digital world. When it comes to the embracing technologies as well as digitalization, now if you look at what we are trying to do is, we are trying to disrupt and bring in digitalization, it is with actually two of the main important aspect of this digitalization as well as technology is one is accessibility, because we are providing accessibility to the wider audience, and more importantly than accessibility, what we provide is digitalization, which means it is also making things automated and less manual intervention, and those are the things which going forward and making things happen. And rightly, as Mr. Linkel said, there is a very important aspect of compliance issue globally, where compliance is what is harming. No, I don't want to call it harming, but it is one thing which is always pushback from going digital also, because we need to have a global standard when it comes to digitalization. Unless and until you have come up with a digital standard, which has to be from the regulators, the central banks of the world, even the IMF, World Bank, the ADBs, and all. They have to take an initiative. It's already there. There are initiatives in standardizing many things in the world, especially on the trade front, because even bill of lading is also coming. So these sort of things need to have a global standard. If there is a very clear global standard available, this will help countries like Azerbaijan, especially the emerging market countries, embrace technology faster. Because unless and until you have a standard approach, it is always difficult for an emerging market banks or financial institutions come into embracing change, come into embracing technology, and come into embracing whatever they want to take it forward. So if you have a standard approach, it is easier for banks and the financial world to embrace technology faster. Now, ICC as well as SWIFT, they have taking initiative in standardizing many aspects of trade finance. Uh, in this respect, I will encourage the emerging markets to look into these opportunities where they can go into the global standards of which is on the table by SWIFT as well as ICC. They have to embrace into this, because this is one thing which will help them go into technology as well as digitalization. It is very important, because standardization of things are the way forward, because it has to be initiated by the central banks. Central banks of the world have to come together and see this is the standard we are opting for. Even to the very small example, when it comes to e-billing, a bill of lading, how do you verify the signature? So that has to have a standardization, because it has to have the legal support of each and every countries involved in doing trade. Globally, if you see last year 2022, we are talking about a global trade finance merchandise of almost $25 trillion worth of movement of goods. Out of that, even the emerging markets have always find it difficult to finance their trade. As per some reports, it is already reached $3 trillion worth of shortage of financing, which is faced by the emerging market. They need to do the trade, so they need to be supported by global financial institutions as well as banks to do trade that will help the emerging markets come out of, even if it is come out of poverty, come out of, they come into a global banking scenario. This is always help. That is where I always emphasize the need for global standardization of trade activities. That is the way forward. That is how I see the technology, the digitalization, or whatever you call it. It has to have a standardized approach whereby banks can come in and embrace digital change. Of course, there are fintech companies like ours. We are bringing into the platform standardization of the global. When I talk about trade asset itself, what we are bringing into the platform is very simple, because we are taking banks as members to the platform, and we are giving accessibility to banks for their LC confirmation, for LC discounting, issuance of guarantees. Anything is possible, because anything in the globe where a bank wants to sell and buy assets, which is possible. So we are now, as we speak, we have 109 members in the trade assets platform, where a bank, let's take an example of a Bangladeshi bank, wants to issue an LC which need confirmation and discounting. We have already 34 Bangladeshi banks in the platform. They can post their transaction into the platform, and they get viewership of 109 banks. They get bids for the LC confirmation, discounting, and they can take it forward. This is how, because again, there is always a pushback from banks, because you are trying to disrupt, which is already been conventionally doing for the past many decades. So when it comes to disruption and change, there is always, we see some pushback, or some reluctance from the bank. But once banks start using our platform, definitely they will see the positive side of it. They see the digitalization absent. They see the manual processes being moved to digitalization. This will help the banks to do more and more transaction. And in the long run, what we are trying to achieve is the gap of trade finance gap available with the financing and LC confirmation. This will be diluted, and in that respect, trade asset will support the global trade in a big way, and support the emerging markets and countries where banks are finding it difficult to do LC confirmation or doing trade. That is the global, we are trying to do a global initiative whereby we support the trade. That's how I see trade going forward. Thank you.
Thank you, Mr. Majidso. Thank you for your sharings. Mr. Bandari, we would like to hear your thinkings.
Sure, no, absolutely. So the banks, where should they move forward, right? So there are a few points which I would want to bring from my own practical experience of having been a banker and having dealt with banks as a fintech founder. So there is, while from the top down, there is always, if you look at the strategy for the bank, everybody from smallest bank to the biggest bank are talking about digital innovation, that we want to be converting our processes from legacies into, embracing new technologies, working with new partners, and making the whole system more efficient, whether be it on the payments, whether it be on the asset management, whether it be on peer-to-peer lending, whether to be it just managing internal capital market issuances, trade finance, etc. So I think in terms of the acceptance from the top down, to that it has to be done, it is inevitable, because if your competitor does it and makes customer experience 5x more useful, then you will lose out. So this is obviously a good thing, and maybe I think over the last 2 years it has accelerated, because the global leaders like JP Morgan, HSBC, many other banks that I can think of, DBS in Singapore, they have really shown that if you invest now, and they're investing billions of dollars in embracing technology, creating their system more open architecture, and also platformication of banks, where you can provide third party services through one single platform. Those are things that have to be done. Now in practice, it has to be, there are two aspects that one needs to take into account. One is this DNA or culture of change, innovation, is it spread across the whole bank of 8-10,000 people who are working, whether be it in the back office, middle office, front office, division heads, and compliance, risk, and that is where we see that there's a gap. People, there are banks who have done very well in the West, where everybody wants to take a proactive initiative to improve what they currently are doing. And there are banks which are resistant to change and saying, okay, things have been going right now. What would it lead to? What would be the consequences of me as a worker, what would be the consequence? Why should I have a limited period of time? Why should I take such a strategic project? So essentially, the bottom-up approach has to unify with the top-down approach, with everybody with their KPIs very, very clearly stating that we need to we need to change. It's a competitive mindscape. In UAE alone, there are about 50 odd banks which are in the lending space, and obviously in a population of 9 million. So not everybody will come out as a winner in the whole digital embrace. So they have to be alert to this, right? So essentially somebody else will innovate, or non-banking institutions will take over their market share. So my first point being that there has to be a very bottom-up approach. And how do you incentivize employees of the bank to partner with companies like us or others, or embrace new technology? So it should be very much part of their key KPIs, that today what you're doing, how can you make it better? And that is one of the key elements that they have to be judged upon, and that will really create a much more proactive approach as far as banks are concerned. And I'm saying that in a general way, but obviously there are banks who are more key, sensitive to changes, and we're working with two banks who basically are building solutions to take out the bottlenecks in the agency bank. Agency acts as a custodian in terms of a syndicated loan, where loans once issued to the participating syndicate, agency bank takes care of all the adherence to the facility agreement covenants, payments, drawdown requests, and every bank in the world sees that as a major bottleneck. So how do we work in an effective manner? Yes, two banks have come and saying, okay, let's automate and create some solutions around it, and we obviously are working with them, understanding their experiences and employing our technology. But it has to be an industry-led solution, right? So I may work with two banks, but if the remaining ecosystem remains not embraced to that change, then it would lead to a non-scalability of that business. So really, industry bodies, regulators, they have to come in. Central banks, they have to come in and say, here, these are things that we have to adopt as a business, and you work with partners or build it internally, but these are things that we would want to see as part of your roadmap. So that's the second way which will accelerate the digital ambitions and digital embrace, and the whole transformation will take a meaningful role, rather than just in paper or in terms of building a better front end, for example. So essentially it has to be a very process driven change. I feel that the time has come. The large institutions are plowing huge amounts of money, and the smaller institutions will have to also look at how they can stand up to that change. And the only way they can do it is through an open architecture. Banks cannot innovate by internally, because it's a large organization, and by the very nature of it, it is spread across multiple things, multiple targets. So really, they have to come in with nimble companies like us, who are looking at very niche markets, and who are looking to say, okay, we will give our best efforts and work with you. It has to be collaborative, and then build something which will make things move faster. So that's the case I've seen. But overall, to conclude, I'm very positive with the banks that we are interacting with. I think over the post-COVID, there has been a much larger realization, even though there have been some failures. But early adopters will always have failures, right? So it cannot go from X to Y, or A to Z in a matter of days. So it is a 4 or 5 year long horizon. So people have to have really patient capital and patient and a vision to be able to implement those changes. So that's, but overall very positive. I always liken this whole change from what music industry went to, where everything changed from CD to MP3 in a matter of a few years, and today we don't even look at what was relevant 10 years back. So this is exactly what would happen in the banking industry. Thank you.
Thank you, Mr. Bandari. I agree with you. Everything comes at the right time.
Sure.
And today, of course, digitalization is driving process and product innovation in the asset class, also making trade finance more accessible to the SME sector. Thank you so much for your sharing. And I would like to ask Mr. Lingiel how banks in Hungary determining their long-term impact and viability in terms of the new technologies. What is the best case of is this process? Thank you.
Mr. Swan, I think you're on mute.
Mr. Lingiel.
Yes, sorry.
Yeah, thank you.
So once again, in Hungary, the banking sector consists of basically of two parts, the Hungarian-owned and the foreign-owned. As far as the foreign-owned banks are concerned, they are introducing their technology from their home country, like Italy, Germany, Belgium, and so on. And the Hungarian-owned banks are catching up very much. We also have fully digital banks, and in average, the Hungarian banking sector on the EU landscape is somewhere in the middle in terms of digitalization. There is one area where we are leaders. This is the payments area. We have an instant payment system, which is obligatory for all Hungarian financial institutions. All payments under, how much is this? 5,000 10,000 euros in an obligatory way are handled in less than 5 seconds in this instant payments system. Practically, it's 1 or 2 seconds. So I have my experience. You make it, and it is done instantly. This is mainly used by the commercial sector or by companies, but I use as a private person as well for the transfers. Also, in terms of mobile payments, card payments, there are a lot of new developments. Mobile payments are very widely used. And competition is mainly in the retail sector for retail customers with the fintechs. I think there is a lot of hype about this competition. So we see, yes, banks are heavily competing, but they are not losing their franchise, thanks God. Because now, after the events with the Silicon Valley Bank and the Credit Suisse, I think for the banking sector, at least for us, is the main key issue is stability, keeping the trust of the clients, and of course providing high-tech solutions. That the main issue is once again is stability and customer service and good relations with the banks. Even if it costs more, banks decided to keep their branches, and the government forces the banks to not to close branches. And even in some cases, in some places, they are obliged to open new branches, which goes, I think, against the global trend. But that's how the government is trying to support the banking sector stability and accessibility for the population. Regarding the fintech, so there is a kind of unfair competition. They have a light or no regulation, not comparable to that of the banks, and that's how they can, to a large extent, that's why they can be cheaper. Of course, the technical advantage is there. And we have seen in Lithuania the closure of the first payment service provider due to compliance issues. So I think that the competition will be very, very substantial, but I'm very confident about our banks being able to compete with all challengers. There is one area which we have not mentioned, and I want to emphasize the opportunities of e-commerce. So when we speak about foreign trade, we normally think more about the classical way of trade. and e-commerce is becoming very important. So that's why the Hungarian, I mentioned that we have the Hungarian Export Development Agency, and they signed an agreement with the Digital Commerce Association in Hungary, and the Digital Commerce Association's head is the chair of the Hungarian Google. So there is a way of developing foreign trade also through the e-commerce. The same happens, by the way, in the UK. A new body was established to develop SMEs e-commerce opportunities. So coming back to the banks, yes, there is a dilemma about high regulation and the costs and going ahead with new projects. So this is something which is keeping the banks back a little bit from quicker adoption of latest technologies. Let me mention here AI. So Hungarian banks started to use AI. So far there are pilot projects, but I think that will be something very important in the coming years. Thank you.
Thank you so much, Mr. Lingiel. Thank you for your sharings. Mr. Bandari, as a fintech founder, from your experience, what is the best and most successful digital transformation in terms of trade finance and in general, might be, from your experience?
So, what is the most, sorry, if you could just repeat that part in terms of what is our personal experience?
In terms of trade finance and in general.
The best experience we've had as a company? Okay,
Yes,
sure.
yes,
So,
exactly.
yeah, so I think one of the great things is that when you are building a B2B platform, a lot of the success that we felt was that you cannot just make things slightly better, or let's say even 30 to 40% better than what it has been currently. People really want to see that wow factor of 2 or 3x in terms of time, cost, efficiency, transparency, and all those elements which are required. So giving a more a direct example of deposits and basically the capability of loans as a marketplace. So when the banks came to our platform and saying, yes, we will use as a digital funding channel where you can come and raise deposits through with overseas customers. So for example, a bank in Kuwait can raise money from a pension fund in France. They never had those clients before, and it became suddenly an open competitive marketplace. So one of the example was the first Kuwaiti bank came. They raised substantial amount of money from customers' ability to diversify their liability base and really get some high quality deposits for their own stability ratios and LCR ratios. Certainly, we saw that today, the next few days, other banks, Kuwaiti banks, were saying, okay, we want to join the platform and we want to be part of this exercise. So our experience, personal experiences, you have to always have one sponsor, one leader, and then the rest will follow. The network effect of building platforms like ours, whether be it on the trade finance, loan syndication, or deposits, is the network effect. You get a threshold number of institutions, and on the other side, the counterparties, in this case, were corporate treasurers or pension fund managers who they would like to have as customers, and then bring them all together. It just becomes a win-win situation. As we always say, we have to create solutions which has a positive non-zero sum game, so everybody wins. So to be able to do so, we have to have a solid value proposition for the banks. And having said that, the customers should also feel compelled. So for customers use case, in the same example of deposits, they will say, okay, here I have X million to place in 3 months deposits, and I'm seeing globally the rates from different banks. And today I can run a RFQ and see who within my investment guidelines can give me the best deposit. So you're actually making them bid for deposits rather than just relying on the relationship banks. So those are the kind of things where they say, okay, it's a platform for efficient price discovery and ability to also manage my cash more effectively. So that was one example we saw. And then, of course, the whole idea is distribution and getting a very mature ecosystem. So that's something which takes time because the onboarding cycles for banks are unfortunately long, and we have to work through it. So, but once we achieve that, then there'll be some amazing examples of what one could achieve. So this is one of the examples I can share with you.
Thank you so much. I fully agree with you. Actually, B2B solution is the best for nowadays, is the best solution in terms of exchange of transaction between banks, and also in terms of exchange of products, services, information between the businesses globally. Thank you so much for your sharings. And I would like to ask Mr. Majitso, also as a founder of the Trade Assets, to share your best successful case in terms of your business. Thank you.
It's a very good question, and I would actually like to comment on this because the very simple reason is that trade assets stands for always stands for efficiency and accessibility. I would like to take an example whereby we are whenever we go for a marketing pitch, we ourselves put this in front of our customers. Our customers are all banks. We are inviting banks to be the members, and even we are bringing in now the corporate world also to the platform, including the bigger commodity traders and all. Now coming to our success story and what we always put in front of our clients, we open new corridors. That is a beauty of the trade asset platform. This platform connects you with the world which you cannot imagine before. Now I'll tell you an example. In our platform, we have a LATAM development bank as a member, and they are owned by 23 LATAM countries, which means each and every members of trade assets gets accessibility to these 23 countries through this development bank. And even when when the LATAM Development Bank joined our institution, the first thing they asked is they need accessibility in India, where there are a lot of trade happening between the LATAM countries and India, mainly on the pharmaceutical side, on the four-wheelers and two-wheelers from India going into LATAM. And also there are many service sector IT companies that are giving services to the LATAM countries. So there will be a requirement for issuance of guarantees from the Indian banks to the LATAM countries, as well as the other side, there will be import LCs coming from the LATAM countries which require confirmation or discounting in Indian subcontinent. So what we have done is we have connected the banks from Indian subcontinent to the LATAM Development Bank, which has given immediate access to the Indian subcontinent to 23 countries in LATAM. That is something which is fantastic, because if you look at that scale, what a bank can operate now without going through 23 countries, we are giving them accessibility through one e-platform where they're getting access to 23 countries in LATAM. Even in this part of the world, especially where I am located in Dubai and in the GCC, yes, there are a lot of trade happening between GCC and LATAM countries, but LATAM being far from this place, it is always a difficult task for the banks in this part of the world to do LC confirmation or discounting of banks coming from LATAM countries. Now, it is normally in the past what the banks rely on are the international banks of the world, the JP Morgans or the Commerce banks or the DBs of the world, Standard Charts of the world. They always rely on these banks for their transactions. Now, we have 109 banks in the platform, which includes the multinational banks, the international banks, and we are also now seriously in discussion with the multilaterals of the world. So once they are also coming, the platform will go into a different level. The connectivity between even in our platform, we have a lot of African banks also. So we are connecting Africa with India, Africa with GCC, and even sometimes Africa, within Africa, there are transactions happening through the EAT platform, which in the past was not happening. So that is where the digitalization and the technology can help get connectivity, which in effect will give them accessibility and efficiency. This is two part. I just give you an example how the efficiency part comes in. Now, let us take an example of a transaction whereby an Indian bank wants to issue an LC to a LATAM country. And what they do, they will contact five of their correspondent banks through emails or telephones, and they ask them, can you confirm our LCs? Can you discount our LCs? Then they wait for it. Now, with our platform, what's happening is very simple. They post the transaction details into the platform, and they can either select all the banks or they can select whom they want to show the transaction. They select and they get bids. In this case, what happens is they even get better pricing, and in some cases they will be even astonished to see that they never thought of a bank having limits for them, giving them a bid in the platform. It happened in our platform once. An Indian bank posted a transaction for an LC going into Singapore, and which was they got a bid from a Kuwaiti bank. So they were surprised to learn that, oh, this Kuwaiti bank is having limits on us, which other way they didn't know that. So this is how the platforms help banks to get accessibility as well as efficiency. In the long run, now what's happening is there are a lot of, as Mr. Bandari said, no, there will be a process which takes a long time to a bank to come into the membership scenario, because we have been talking to especially the world leading banks for months and in some cases years. We are talking, but it takes time for them to, because they have their own priorities. For them, maybe not coming to trade as it is not their priority, so they have to see which is their priority, then they take it forward. Then there will be a lot of questions asked to us, because we have a really a standard questionnaire which we have already built, where we, whenever we go on market, we give them these are the standard questions which we receive from already onboarded banks. So it's a long way, but we are reaching there. Our target is to have at least 250 banks by 24-25, so that we'll be covering at least 50-60% of the world trade, which will, in a way, we as trade assets support the global trade finance initiative. In our platform, it is not only trade. You can do even bilateral loans. You can do syndicated loans, and sometimes we also help banks to raise finance also. The liquidity support also. So it's a long way, but we are on the right track. Thank you very much.
Thank you very much, Mr. Majitsu, for your interesting sharings. And as a conclusion, I would like to mention that small and medium enterprises play a vital role as employees and wealth creators in both global and national economies. But the reliability of their contribution is still of concern. And this is because the SME sector has limited access today to financial services and products, and the effective risk mitigation here, strategies here, essential for outgoing sustainability. But however, to facilitate SME access to trade and supply chain finance, a digital transformation is required with a paperless approach, improving the quality and speed of business operations. And also, as I mentioned, digitalization is the driving process and product innovation in the asset class, as well as making trade finance more accessible to the SME sector. And this combination is enabling more small and medium-sized business to access global value chains. And if the digitalization steps to make better use of information communication technologies are taken at enterprise level, the SME sector as a whole can become more effective in the acquisition of the levels of financing needed to grow and diversify. Thank you so much. And again, I would like to express my thanks to all guest speakers, Mr. Majitsu, Mr. Bandari, Mr. Lengiel, for your valuable contribution to this workshop. On behalf of UNEC, and I would like to say thank you for your sharings, your experience with us, and looking forward to see you on our future events.
Thank you very much.
Thank you very much,
Thank you very much.
Dr. Aigul.
Thank you.
And we will
Enjoy
make sure that Trade Asset will also explore Algeria and Azerbaijan soon. So we will visit Azerbaijan and bring in Azerbaijani banks to the trade platform, so that you are also your country will also help. Getting access to the global banks in the platform.
Thank
we
you.
have
You are
target
all
to come to Azerbaijan.
in Azerbaijan.
Thank you.
Thank you. Thank you.